What's up, guys? Todd Gordon here. Hey, coming at you from the NASDAQ doing CNBC, but I wanted to talk about kind of the sequence of events that we've seen. We see some real volatility in the markets because of this move up in yields. And I'm seeing so many traders and analysts like committing themselves to one camp. I'm either in the bull camp or I'm in the bear camp. Like, as a trader, why would you do that? I think as a trader, you got to kind of be a libertarian. You got to take and borrow values, borrow ideas from both sides, meaning you got to trade the bull side and the bear side. We're in a position right now in the NASDAQ, which I'm going to address here in just a little bit at the NASDAQ. We're actually in NASDAQ options. We're going to adjust that trade. But first, I want to tell you a story that goes back about a month ago, starting with the Russell. We were long the Russell, had some profits in the trade. The market started to roll over. We listened to what the market was telling us. We had an open mind and we adjusted. And then I'm going to bring it back to current day. We're going to adjust that NASDAQ position. All right, so be back.
This would be 1, this would be 2, this is small degree 1, 2, 3, into a triangle, and we're just looking to catch the completion of triangle 4, green 4 up in green 5 of 3. Okay, so we should have post triangle thrust here bring us up into the 1725, 1750 area. But I didn't want to get super directional because post triangle thrust brings us into a wave 4 drop, right? So I wanted to get something that would make some money, kind of aggressive on the way up here. But then if we back away a little bit and do complete 503, it's going to be fine and actually might even work for us. And as long as the market just kind of hangs around in here, it can be whippy. It can be very volatile, but if it's contained in this range, that's good. It'll just chew up time on the clock and take the premium away from the short strike of this butterfly that we're doing. Okay, we're looking to do a broken wing butterfly. And a broken wing butterfly it's a short volatility trade. Butterflies are short vol because you want the extrinsic value of this 1730. You want the extrinsic value to come out of there. Okay, so then if we make this a little bit more of a directional trade by dropping the lower call strike by 10 points, it's more of a directional trade. And that's filled. Okay.
This one I'm up $3,200 on this one. If we look at the rut, so we're right at 1721 is where we closed. We'd like to bump up there a little bit, but we're starting to get into the point where, a couple weeks from now, if we start kind of moving up here and just hanging around in this range, all of a sudden this same price on September 30th, 2 weeks from now, the trade will be at $5,400. And you start getting in October, and then you're talking, $13,000. So we're going to stay with this as long as we can. I don't think we're going to stay range bound forever. So we're going to manage accordingly, but I plan to make some more money with this trade. I can't get this out of my brain. As quiet as the market is, number one, and number two, this is a three-wave structure. Up, down, up. What if this is truly coming to the point where we need to have a serious volatility spike? What's a reasonable drop? I would not be shocked to see that. That angle of attack, is that excessive? Is that, am I trying to be sensationalistic? I don't think so. That's going to come in right around November. That's going to come in around 6,600. I kind of prepped you for this idea that we want to put on that disaster insurance trade in the NASDAQ. The way I was kind of pricing this thing, if I did, for me, this is a $3.45. It's going to be the cost. So that's the trade. 335 is where we're getting quoted here. So if I hit confirm and send, max loss will be $4,000. But as I said, I'm going to risk roughly half of that. Okay, so that's going to work. Max profit is $85,000. Chances that happening are almost zero, so that's fine. Don't fall in love with that number. Right. Oh, also, I don't know if I mentioned it. Oh, I just got filled. 345. Okay. See it. So we've got the disaster insurance on. We're fine. I'm losing money on it right now, but the rut was making money and the S&P was making money. So, basically we're long the S&P. moderately long the rut and short the NASDAQ. So we got it all over the place. But that's the kind of market we're in. But, I'm down $1,200 in the trade, which is nothing because, we closed at 75.63 NDX. Watch the purple figure right here. Down $1,200, 1168. We go positive on that trade at 7450. That's right here. Okay, so if this count works, I was expecting to ring the register on the on the rut trade, but market gods had a different plan for us. I mean, maybe it comes in here. Oh, I hate to do this. I hate to cut this trade, but post-Fed, market is coming off hard, and I don't have any more bullish counts. So sending out the text message now. Post-Fed sending stocks lower. We had some really nice profits in this guy. We have 1,600 in profits left, but we're just coming off hard. We got 13 minutes to go before the close, so I'm sending the text message out. 12:57 on the mid. Let's go 12:60. And that's filled at 12.82. This is sad. I had this trade forever, and we had some high hopes for it, but there's just no more bullish counts that I can hang my hat on here in the rut. We have to let it go. So this NASDAQ, same kind of problem. We have this huge overlap. There's a correction. This highly overlaps the last one, so it either spells diagonal or something. And then if you focus in on the moves here in September, down to the 1 hour, really overlapping, up, down, up. So a lot of overlap in each subsequent correction, and here we go again with overlap. So this market, I'm trying to hang on here, but it's getting really hard to be long. So we cut it. I hate to give back all those profits, but you know what? At least we made profits on the trade. So anyways, that's trading. That's just, it's not your money until you hit that sell button and that money goes in your account. And even then, it's not your money. It's not your money until you take it out and put it in your bank account. So, yep. It is interesting goings here.
The NASDAQ has experienced a nice period, a nice run here, but what you're seeing just recently over the last couple of weeks is, one, we have a double top, number one, and number two, if you were to extend this trend line that I started to draw, you would see we've lost uptrend support. Is this catastrophic? No, but I do think that a retest of the July and June lows right around the 7,000 mark is in order. I am short the NASDAQ.
It's October 11th, just about noon, and I'm going to go ahead and book some more profits on the shorts. We've seen a really good push down. We're starting to hold some fib support, so I'm going to send the text message out to customers. We're going to book all of our profits in the rut. We're short the rut, and half of what we have left in the November NDX butterfly. Okay, so first thing, here's the rut. Okay, so we have a 1580, 1570 put spread in the rut. So I'm going to go sell. The mid price is 5, so let's see if I can get that filled. It just went to 480 and filled at 480. That's fine. And then let's do the NDX. I'm only going to take half of what we have on here. I've already taken half profits on this, as you saw. We're going to go ahead. I'm going to take another half of this guy off, and I'll show you why in a sec. So here's the support that we're talking about. We're looking at a completed 5-wave move up. This is the last possible bullish count I can stick with, and I'm just observing this possibility to protect our profits, and if it breaks down, then I'll reestablish the trade. So you can count a completed 5-wave move out of the triangle in early 2018. If you look at the move so far, it's equal in terms of the two down legs. So 7,012 in the NDX is equality. And perhaps this is wave 2 of higher degree 5-wave moves. So let me show you that. We're also at the 61% retracement of this move. So it's possible this is wave 2. And we could have another several legs to go before the wave 5 top comes in and then we drop significantly. I don't think this is going to be the case, but I want to protect my profits in case this happens. Okay, so if we get down to the 30-minute, you can see that we're starting to bounce here a little bit. So I want to come out of this trade. Let me go to 825 and see if they'll give us anything.
All right, so here we go, guys. This is the NASDAQ, and NASDAQ has taken a big drop. We still have about a third of our position that we established in Trading Nation. And what you're going to see here is the market has held this deep kind of zone of fib support here. We've taken off 2/3 of our position. Hits Friday, the market has come back and tried to close this gap. It's done so, and it's starting to get a little bit of a bid, okay? So I think it's time that the market might come back up and retest this 75 area. So guys, I think it's time to be prudent, not be too greedy here, take our profits on the trade. We still have 1,500 in profits. We've given it back about 700, which is fine. So what I'm gonna do is just go over here and begin to close the trade. We're going to sell the butterfly at 740. Let's see if we can get a fill. And that trade is working, and I'm filled. And that's a wrap. Okay, guys? So, again, don't be so, either bullish or bearish. This is a two-way market. There's a lot of volatility. So, let's be prudent, protect the profits, and let's just move on to the next trade. All right, guys. Hope that helps. See you on the next video update.